Well, good morning. My name is Mark Lyons. I'm the Director of Sales at Senior Market Sales. And welcome to the episode for the Life webinar for June. Policy Risk is Retirement Risk, Strategies for a More Resilient Retirement Plan. And I think we pretty much know that when we say policy risk in that title, it doesn't mean insurance policy risk. It means government policy risk. So I would like to welcome my guests today. We've got David Duley. Dave's company PlanGap partners with some of the top insurance companies to bring to market for the first time a suite of products to help Americans protect against potential reductions of Social Security benefits. He grew up in Flint, Michigan, and knows firsthand what happens when big retirement promises are broken, and is committed to the bringing of products to the market that help Americans take control of their retirement income plan and stop having their hard-earned money subject to political football. In 2024, PlanGap featured Annuity One Deal of the Year in America. We also have Paige Phelps. She's the regional vice president at North American Life, and Paige focuses on wholesaling and supporting financial advisors as they grow their businesses and service their clients with confidence. Her experience drifts across the different areas. Um, uh, and I'm sorry they cut it off the screen. Jeez.
All good.
Not very
Taylor, you can end it
professional,
there.
Paige. Not very professional on my
All good.
part. All right. Well, welcome you two. We're so happy to have you here. I think we're probably going to hear from David first, and he's going to talk about building a more resilient retirement plan. And I think probably Plan Gap plays a big part of that. Is that right, David?
Yes, sir. And you're right. It is, I think we're entering maybe a very poignant phase of government policy meddling in how retirement plans stay on track. A lot of concern around there around debt and deficit. We'll talk about the new report that came out literally just 2 weeks ago, but it kind of creates that warning light that we need to pay attention to this.
All right, that sounds awesome. And then Paige, after David's presentation, Paige is going to talk a little bit about North American and how their specific products have Plan Gap available and help consumers to save for retirement.
Yep.
Okay.
Sounds
Well,
great.
David, let's get started.
All right, let's share the screen here, make sure it all works right.
And for those of you that are on the call, this is live, and so you're free to ask questions. Please use the Q&A feature down at the bottom of the screen. If you try to use that chat feature, it will not work. So again, Q&A, and we'll either answer the questions out loud or sometimes we'll type back a response. So, all right, with that, David, take it away.
Thank you, Mark. And hello, everyone. Thank you for joining the presentation. Hopefully, today's discussion around the Plan Gap benefit and specifically around what's going on with Social Security is enlightening. Maybe not the normal topic and the normal way Social Security is discussed, but really using kind of this new era that I say of government policy risk and how it plays such a major role in a successful financial plan. A lot of us have heard about the other four risks, right? Inflation risk, market risk, medical risk, um, and um, and different tax risk. But the government policy side of things is really up for changing in debate in the very near future. In fact, I was reading an article recently about the upcoming election that this slate of senators is most likely the first slate of senators, new senators in the last 40 some years that's going to have to deal with Social Security reform, especially based on the new trustees numbers on when that trust fund comes out to an exhaustion date in which only money coming in is available for paying the money out. And so as advisors, we have an opportunity to sort of address that elephant in the room and use private market products to help provide peace of mind to our clients that regardless of what happens up in Washington, D.C., your plan is on solid ground. But what's happening, because there is so much awareness and so much media around what is happening with Social Security, people are rightfully concerned. And so this was 2 weeks ago. The new trustee report was released, and it said, hey, if things don't change, if there's no reform, Social Security Trust Fund will run out of money in 2032, at which time there'll only be enough money to pay about 78% of every dollar promised in the program. And so we're going to talk about what might the solutions be and who might be affected by the solutions. But this is a huge marketing campaign for a huge retirement income gap need in most plans. Because if you have about $2.5 million or less of retirement savings, Social Security is going to play most likely a very large role in that retirement income plan. And for 95% of Americans that have 2.5 million or less, it's a very important topic. And so it's no wonder that based on a recent survey about the top concerns in retirement planning, cuts to Social Security is number two outside of inflation. And so you have hundreds of millions of dollars of marketing creating this concern, and our opportunity is to address that concern with clients and help them navigate it. And so today we're going to talk about how this concern often drives bad decision making when it comes to the claiming of Social Security, and then the compounded effects of that bad decision making. And so specifically for the ideal IUL customer, that higher earner, mid 40s, Gen X, they are actually the highest ranking cohort that will take money early because they don't think they're going to see their Social Security benefits. And so it's driving poor claiming decisions in their financial plan. And so if we can, through the PlanGap benefit, say, hey, we have a release valve, we'll show you how this product can help offset some of that Social Security, that potential Social Security reduction if you are in fact affected. We can help you feel confident to wait till age 70. And so what does that mean? It means all of a sudden real dollars back into your client's pocket. So if a normal kind of average IUL buyer pushes off from age 67 to age 70, that can increase their monthly retirement income by a little over $1,700, which is real money, which over the course of that person's life can add a little over $400,000 of extra money. What a lot of people discount and forget is what happens with survivor benefits. And so that larger number stays. So if someone can wait till age 70 in the household, that larger number will stay intact upon the death of a spouse. And what is something that the current private market can't offer is this income is inflation protected. We all know about the Social Security cost of living adjustment. And so this idea of waiting till age 70 and using private market products to help people get comfortable in waiting till age 70 isn't, don't take my word for it. Basically, everyone out there that is of good health, as evidenced by what Morningstar and BlackRock think, should wait as long as possible and bridge till age 70. And that is, I'm sure most of you know this, but I kind of have to go over it. That is because you have this almost guaranteed 8% simple roll-up on Social Security income past age 67. And of course, it works in the opposite too. You have the negative effects of claiming early at age 62. But what happens is, because there is so much concern about the health of Social Security, a lot of people aren't making the correct decision, even if they have the financial means to do so. A little less than 10% of claimants are waiting till age 70. And so the real opportunity now is for you guys to go to your clients and talk to them about how do we architect a financial plan to make sure it's confident, regardless of what the government does, so you can wait till age 70. And this is, I think I mentioned sort of the marketing plan or the marketing campaign that's already out there by the government. This is a real document. It's called Will Social Security Be There For Me? And you can go to ssa.gov there for me, or / there for me. And, I always say if I was selling a car and I had to put a pamphlet out that says, Will my car start for me in the morning? That's not indicative of the quality of the product. And so you have all this awareness going out. And the new update, this was just a few years ago, was 2035, and now it's already 2032. And it's around 3/4 of every benefit is promised to be paid at that time, which means about a quarter not being there. And when I started the company, it used to be almost sacrilegious to believe that people at or near retirement could be affected by government policy. But there's a couple examples that actually fly in the face of that. One is in the 1970s, there was something called the Notch Act, which affected someone age 60. At that time, age 60, it affected their payment at age 62. In addition, I had the opportunity to talk to this guy, the former head of Social Security, and he thinks we're going to get really, really close. And I think instinctively we know we're going to get really close to the spectrum of or the idea of Social Security cuts, and then there's going to be how much less in benefits and how much more in taxes are people willing to pay. And the baby boomers, had an opportunity to fix this. 10 years ago, they were about half of the electorate. They were about half of the voting bloc. And so they could have reformed Social Security where their benefits probably wouldn't have been cut. But assuming we wait towards the last minute, which big topics in the political scheme of things in America seem to wait closer to the last minute, just like in 1983, which was the last major reform, the older generations ain't going to be in charge anymore. And so all of a sudden, we have to think about, well, who's going to be in charge and what are their priorities? And will that affect my clients? And so what we do know is the younger generations have a different priority than bailing the boomers out. This is the whole OK Boomer movement where it came from. The sentiment among younger generations that the boomers have extracted enough wealth out of the system, out of America, and that the younger generations in their peak earning years, if they're going to pay more taxes, they want it to go to other things rather than bailing the boomers out. And so,
Hey, David, do you mind?
yeah,
Do you mind if I interrupt? I
no,
just have a question. I don't mean to throw you off the presentation.
not at all.
Um, with regard to the people that are making the bad decision to take Social Security out, is there any sense of how many people are doing that because that's actually when they're retiring and they need the money
Well, yeah,
versus
certainly there are people that absolutely need the money or are in a career that say is heavy manual labor, right? And so as they can't wait till age 70 from a working standpoint,
right,
right?
right.
And so I think the number is between 30 and 35% of people make a very needs-based decision, right?
Right.
And the other makes decisions around health issues too, because there is a break-even analysis, of course, right? And so if I have severe health issues early in my 60s, or I have very low confidence in my longevity, then maybe it makes sense to take it early, right? But for a vast majority of people, especially as we know longevity is increasing, and we know that those generally, there's a lot of data out there that your ideal client profile, sort of that mass affluent and above, are generally a healthier demographic with longer longevity. Those people are really the targets to look to. How do we wait as long as possible to claim that Social Security benefit?
Yeah, I mean, I know, personally, I've talked to a lot of friends, and then, they're like, I'm going to get mine now because
Yeah.
it might not be there. I'm like,
Well,
what?
so that's a real issue, right? And so then it has those downstream consequences. And if they're making it because of government policy, that's one thing. That's where I think a solution like ours, and Paige will talk about here in a second, really comes in. But if they're making it for health reasons, then that might be the right choice, you know. Yeah. And so, it's interesting because um, I think a few days ago, Bill Cassidy, who's ending his Senate term, is really doubling down on trying to reform Social Security before he leaves, and there'll be a lot of discussion around that. But a little over a year ago, there was the Social Security Fairness Act, and I don't know if you remember, this is where they added people that were on the government pension offset and some other, exclusions to Social Security. They allowed them into the system. And so this was the first time in about over 40 years that there were actually senators that introduced an amendment to, let's say, cut Social Security, which is raising the full retirement age, is a theoretical cut to Social Security. And so I always like to say, the last time that happened, I was watching the A Team and thinking Return of the Jedi was awesome. And so that's how long ago it was. And the reality is, this is going to be amplified more and more and more as we get closer to that 2032 date, which is going to create more and more questions from clients. And why are clients so
Hey,
concerned?
David, just
Yeah.
was Christine the evil car?
Christine the evil car.
Yeah, the
Oh,
car that
yes.
just
Yeah. Yeah. I
ran
think
over
so. I
people.
think so.
Okay, yeah,
Yes.
yeah.
Yeah. Yeah. Yeah. Yeah.
If
Think of
anybody on the call
Cabbage
does
Patch
remember that,
Kid,
just call me and I'll explain
baseball
it to you.
cards, Christmas Story. He-Man was awesome. Um, and so, this is what I mentioned earlier, is the sort of 94% of Americans that have less than $2.5 million saved. This couple has almost $1 million saved, and they want to live off of $95,000 a year. And this is why we think Social Security policy, Social Security news, Social Security claiming is such an emotional decision, because this couple's feeling pretty good about their planning, right? They want to live off $95,000 a year. You have their withdrawal rate, their full Social Security intact. This was a two-income household, so there's two Social Security checks coming in. Their Monte Carlo simulation rate is 98%, pretty strong. If all of a sudden you introduce what the government's talking about to the exact same plan, and they still want to live off 95,000, that plan goes to a coin flip, because now you have greater withdrawal strain to make up for that 22% Social Security reduction forecasted by the government. What's interesting is a lot of people in this demographic that have assets and income believe that they might be targeted by Social Security reform, that means testing could be introduced, right? And so, do I personally believe there's going to be across the board, all of a sudden, reduction in Social Security for everyone? Probably not. I think that's politically very dangerous. But the rich need to pay their fair share certainly sounds like something that could get some political steam behind it. The problem is, what defines rich? And I think we learned during COVID, a lot of people were surprised that they were means tested out of COVID stimulus checks when income was $75,000. Remember, it was 75,000 up to 100,000. Then after 100,000, you got no stimulus. You were means tested. And so again, there's a lot of talk out there on who is going to bear the brunt of these fixes. And so when you learn about the Secure Horizon IUL and some of the tools available to you, you can model to your client what does that reduction actually look like? And a lot of people are surprised a potential reduction could be over the course of their lifetime anywhere between $200,000 and $400,000. And so this is sort of, how do we protect that income stream? How do we have a base of income stream we can rely on regardless of what Washington does? And we know it's a concern for financial advisors. This was an article a few years ago which saying Social Security is such a huge problem. Financial advisors have such low faith in its existence, it's hard to plan around, which is why PlanGap exists and why our partnership with North American exists to bring to market for the first time ever an enhancement that pays an extra interest credit should a Social Security cut of 3% or more come into play, or more than 3%. And so that allows you to have a new arrow in your quiver as you build out a robust financial plan for your client. And we know clients are concerned because we have found, this is a recent survey as well, that if financial advisors aren't talking about Social Security and how to optimize it and protect it and manage it, 75% of clients are willing to leave their advisor. And so we have this storm brewing that, again, don't take my word for it. Jamie Dimon recently talked about it. Larry Fink actually dedicated his annual report a couple years ago to the issue of our debt and deficit in America and the tough choices we're going to have to make. It's sort of like really what runs America is the bond market. And as we get more and more debt and deficit, if interest rates don't settle down or continue where our debt becomes more risky, that will have a spiraling effect on our ability to solve the huge problems of our entitlement systems. And so a lot of people feel like they're on their own. And that is where, again, advisors can step in and say, let us show you solutions that, regardless of the specter of Social Security reductions, we have a plan for stabilized retirement income, which is at the end of the day what most people want. And so by doing that and helping them feel comfortable by pushing till age 70, again, we can really quantify what that means for dollars in their pocket. And even if they push out and they're affected by change, it's affected by change on a bigger dollar amount. And so these are, of course, the benefits that we talked about earlier of the real measurable benefits of waiting till that age 70. And then really the next steps for you all is to how to go out and talk about it. Paige is going to talk here in a second about the product and how it all works. But this is our opportunity to use that awareness, use that concern in the marketplace, and talk about government policy risk in a new and empowering way, rather than people feeling like they're just sort of at the will of government policy and what that means to the retirement plan. And so, Paige,
Yeah, awesome. Thanks, Dave. I'm gonna go ahead and grab the screen from you and share kind of the solution that complements what David just spoken about with the risk. So, of course, when you hear a presentation like this, I don't think you can necessarily say it's optimistic or pessimistic. I think it's just a realistic conversation that we have to have. And as advisors, it's one of the pieces of the retirement picture. It's one of the pieces of the puzzle that our clients are concerned about. I think what you have here is a real advantage in not only product, but carrier, MGA, marketing organization, and senior market sales to your advantage to help bring these types of solutions to your consumers, to help with that expertise. Maybe this isn't your day to day. Maybe this is not something that consumes you. Life insurance or annuities aren't something that consumes you all the time. You may be in different avenues of the business, but this is one thing where you can say, hey, we can have a conversation about this. I've got experts and resources that can help have us have this conversation. And there are solutions. There are different ways that we can look at this. So one of the ways that North American has pulled this together and really emphasized the benefit of the PlanGap is by building an indexed universal life product called Secure Horizon. And we built that in tandem with Annexus. You may or may not know Annexus is essentially a boutique design firm that carriers lean on to help bring different elements of product development, such as a benefit like PlanGap, to product design. And so that's where this whole storm kind of comes together. North American is the product manufacturer. We use design and indexes that Annexus has built, and we use benefits and features like Dave has built over at PlanGap to really drive outcome-driven design, which you'll hear me talk about throughout the couple slides that I have to complement Dave's presentation today. So this product was launched on the Indexed Universal Life chassis about a year ago. You may be familiar with it from our annuity side as well. Our annuity suite that we've built in tandem with Annexus has also got the PlanGap benefit in it and the Secure Horizon name. So all of it is very consistent with what you'll see from North American, from Annexus, and from the PlanGap benefit built into the product. Focusing on our conversation today, it's really around the Indexed Universal Life. As Mark had mentioned, this is a life-driven webinar for June. And so we want to kind of touch on a couple of things here that help just pull all of this together. So when you think about the Secure Horizon Indexed Universal Life product, this is an exclusive opportunity. Not everybody has access to this product. Annexus wants to make sure that distribution partners are well served when it comes to the exclusivity piece of this. And so because you are a producer under Senior Market Sales, you get access to this product. A lot of your peers don't. And with that, you get the strength of design. So there are guarantees in this product. There are tons of different index options that you can lean on and leverage. However, what I want to focus on and where the PlanGap piece of this comes into play is really that far right-hand side of the screen. These are the modern planning solutions, that outcome-driven design that is changing the way that we think about insurance products and what additional value can be brought to those clients and those consumers. And so when we look at the modern planning solutions, that is where the secure stage supplemental benefits endorsement comes into play. Now, I know there's a lot of wordsmithing here. Carriers typically tend to throw in as many variables and words and acronyms as they possibly can. But this is where the PlanGap feature and benefit that Dave referenced throughout his presentation is built into the insurance product. We include this on all the policies. It is no additional cost. We believe it's a value add that every client should have if they have this policy. So let's take a look at how it works. I think for you all listening in on this call, you should have gathered by now a lot of different nuggets and pieces that can help from a marketing standpoint, right? Social Security is obviously a hot topic, hot button. The secure stage benefits endorsement complements that. And I think this is really your marketing pop when it comes to indexed universal life. So how do we get to leveraging the PlanGap if something changes with Social Security? And it's all really built into this longevity benefit base. If you're familiar with indexed universal life illustrations, this probably looks similar. There is an account value, there is a surrender value, there is a death benefit when it comes to that illustration. The piece that's different on this product is this longevity benefit base, and it's this far column on the right-hand side of the screen. This is what we can utilize to provide that PlanGap benefit to help complement the changes in Social Security. So with the longevity benefit base, we take your normal interest credited in the indexed universal life contract, and we multiply that by 150%. That 150% is a guaranteed number in the contract. We have put it there. It will not change. That number does not differentiate from anything. It is 150% that we multiply that interest credited by. With that calculation, that's what gives us that pool of money, this longevity benefit base that we're referring to. And with that bigger number, we can then leverage it for a couple of different things. First and foremost, guaranteed lifetime income. A lot of our clients that we're working with are concerned about longevity risk, outliving their money. There is a way that they can use that longevity benefit base to turn on guaranteed income in a life insurance contract. That's how we've designed this secure stage endorsement. The middle piece of this is based off of what Dave had talked about, the PlanGap, the Social Security reductions. We know that that is projected to change over time. And so if there is a 3% material change to the way Social Security is calculated, they have the ability with this longevity benefit base and this endorsement to actually take money from their contract for a period of 12 years. And this is the piece this is the PlanGap piece, essentially. This is the piece where they can leverage, because of that change to Social Security, they can take money out of their life insurance contract. There is a final piece to this secure stage, and it would be to leave a greater legacy if they wanted to access it. But the moral of the story here is that we are looking at different ways that clients can utilize their life insurance contract for things like longevity risk, social security change, or leaving a greater legacy to their family. And so that's really where this endorsement comes into play. And what David talked about on the front end is if we can push to 70 before they start taking that social security, there are other options here with their life insurance contracts that allow them to bridge that gap. Okay, so let me show you just kind of an example of how this would work. This is a male 45 preferred best rate class. The total plan premium over time is $300,000. For round number's sake, we'll say that the credited interest in the contract is also $300,000. So we're going to take that 300,000 and we're going to multiply it by 150%, which gives us $450,000. We then add that to the planned premium, and that's what gives us our longevity benefit base of $750,000. So with the real money example, any of those three actions that they would decide to take, the life pay income benefit, the PlanGap benefit, the focus of today's conversation, or the enhanced death benefit, this is how it turns out from a real number standpoint. So if we look at that PlanGap, if the circumstances change that allows them to access that PlanGap benefit, this will pay that individual $62,500 per year for a period of 12 years. That should be a good chunk of change to help them bridge that gap with those Social Security changes there. So just again, another way to show you how you could leverage and think about utilizing life insurance in a different way. Those are the types of things that we want to bring you here at North American to make those conversations even more value added with the clients that you are serving.
So, Paige, does that PlanGap benefit affect the cash surrender value in the product?
Yes. So there are some variables there, of course. It kind of works in tandem, like you've got your chronic illness benefits, you're drawing down death benefit when you are taking that PlanGap benefit. So that is the kind of the way to look at it.
Okay.
Yep. Okay, so just to kind of wrap up here and give you some advisor positioning, some personas that you can go after. Anybody that is a candidate for indexed universal life insurance, I think we should be having this conversation. Value-added benefits are going to become more and more important as we go on when talking life insurance and what a client can get out of their policy. These are kind of some key areas that we've experienced and seen success with when you are thinking about your client list and your potential opportunities. Obviously, pre-retirees is a really great spot to be in, especially with the Social Security conversation and the PlanGap benefit. High income professionals are another great category, business owners, of course, and then more of that conservative affluent couple. These are really kind of the four areas that we've seen advisors have success when they're thinking about their client list and their potential opportunities for the Secure Horizon Indexed Universal Life. So I'm going to wrap up just kind of here. Life insurance apps have hit record levels in January 2026. Indexed universal life insurance, that segment continues to dominate the market. It's not going anywhere. It's expected to continue to be a leader in the market for consumer preference and, for continual growth in policies. And really by distribution channel, the segment that you are in as a producer, as an advisor, that is going to continue to grow as well. And so this demand for these indexed universal life solutions is not going anywhere. It's going to increase. But I think what's important is that we as carriers continue to bring that outcome-driven design to you so that you can have these additional conversations with clients and help solve for some of these risks like Social Security and retirement years. So with that, we'll kind of end there. Any questions that have come in?
Paige, there's a question in the chat.
Okay.
What happens after 12 years? So we're talking about the PlanGap benefit. Do they go back to the original lifetime benefit?
Yes. So let me just pull it up. I'm going to share one other piece here real quick. So one of the things that we can provide you all, because of course there are a lot of different questions when it comes to the secure stage, how all of these different things work. We have this FAQ that kind of lists out all of these different pieces. And so I would say it's probably one of the better pieces that we have. We'll send it in follow-up that just kind of goes through, if I take X, what happens here? There is a chart here that kind of talks about the impact to the account value, the impact to the longevity benefit base. So That should answer a lot of these kind of more specific technical questions that you may have, and we'll make sure that you all have a copy of this.
And then, of course, the marketing team here at SMS would be able to answer a lot of the questions that people on the call may have. And certainly we can set up a conference call with Paige or our internal AJ, and then we would be able to go over all those things. And I just want to hit on this point that you'd made earlier about a Nexus. I think we're one of the first distributors for a Nexus, and so we have a very, very long history with that organization, and very, very good partner of ours, and that's something that you can't get everywhere. So there's a just a limited set of agencies that can make those products available.
Yep.
And like we had mentioned, I mean, this is, one piece of the puzzle. I think it's definitely a hot topic. I would leverage it in your conversations with your clients for sure. But there are other things within the Secure Horizon product that are also great. And so I think it's a great opportunity to maybe open the door, begin having the conversation. But yes, Mark, I would agree with you. Reach out to your team at Senior Market Sales to learn more about the other features within the product as well. We are happy at North American to have those conversations too in a more one-on-one type of situation.
Well, awesome.
I am showing on my screen as well. We have a microsite that you all can access, securehorizoniul.com. And there is no login, nothing required in order to access this information. On the far right-hand side of the screen, there is a Social Security reduction estimator. So if this really resonates with you and you want to kind of learn more about how you can incorporate this into your practice, I think this is a really great microsite. It helps them, calculate benefit, how it could impact retirement plan, and gives you some ideas and talking points to continue that conversation and have a little bit more information at your fingertips. So securehorizoniul.com.
So historically, North American has been very strong in the field of providing awesome consumer tools and marketing materials, and I would assume that for all those things that you've talked about here today, there is materials for the producers to use with their consumers.
Yeah, and I mean, one of the great things about the resources here that I'm showing you is it's designed to be consumer friendly. So this is not necessarily going to be like product speak on this website. This is something you can pull up when you're sitting with your client and say, okay, let's talk through this. And it helps explain some of those features. Of course, the secure stage has the information about how you would calculate that benefit base, like the example that we showed in the presentation. And then it talks about the offset to potential Social Security reductions that Dave had in his slides and the PlanGap benefit. So this is all very consumer friendly. It's a resource and a tool for you to help guide that conversation.
Okay, we had another question in the chat. Do the results from the SSI calculator filter back to the or is there any kind of agent specific link we can send clients?
That's a great idea. That at the time is not a feature that we have. So I'm interpreting that as essentially like a lead source that you could send the link and have clients kind of complete and come back and say, okay, we probably need to talk about this. It's a great idea. I'll take it back to our marketing team. Currently, it does not function in that matter.
Okay. Thank you. And for the person that asked the question, if you need a follow-up answer or you have a follow-up question, you can go ahead and put it back in the chat. All right. Well, thank you very much, David, and thank you, Paige. That was great. There was a lot of information that was presented today, and certainly, we can get these folks back on a call if you want to hear more. And Paige is, I mean, from my experience, she's been more than willing to help us out to get cases done and cases placed, and so we thank you for that, and thank you both for being on the call. If you'd like to know more information about either PlanGap or the North American product line, you can always reach out to your marketer. If you're already with Senior Market Sales, if you're new to Senior Market Sales and you just want to call us, the number is 877-888-0166. And that's the direct line to our life department. And you can go out to seniormarketsales.com and click on the Let's Talk or Get Contracted buttons, and we'll reach back out to you. This is typically the part of the webinar where I say we'll see you next month, but we will not see you next month. Senior Market Sales and SMS are moving, and so our studio shut down, and so we can't do it next month. so we'll be back in August with another topic. But again, feel free to reach out to us. Okay, I just got sidetracked by another question that was in the chat, which is contact info, which I just gave. So we want to thank you again for joining us today, and we'll see you in 2 months. All right. Thanks, everybody.
Thanks so much.
Guys,
Yeah.
thank you.